Hello folks, welcome to another daily Bitcoin market analysis by Inspocrypto. We will start with a short initial comment because I have the feeling that many don't they take all the news as the absolutely truth without to ask why, or for example, the banking problem that we have, the banking issue. Now they are saying, hey, that's going to come to Europe next. Obviously, that should be, because they are so well connected, US banks with, even my client, and that's not a huge bank. If I take a look to their order books, I can see Goldman, I can see JP Morgan, I can see Bank of America and different other American banks also involved here. That's part of the globalization, and that's usually something where I would say, look, that's great. That's great if everyone has the same interest. If we don't have a disruption, of course we have a disruption. And we can see, we have talked about that on a geopolitical level. We are seeing big changes coming. So obviously that will have an impact to the economy as well. But the question is that just normal that banking sector is having those problems right now? I can say no, it's not. Is that new? No, it's not. So it's not new. These problems happened just before, and I said why. Just imagine you are a bank, and your main income is coming from credit and interest. So someone is coming to you and saying, hey, I need some money. And you say, hey, I have money. I have a lot of money available. How much do you need? I need 10,000 euros. Okay, or $10,000. That's fine. I give you those $10,000. But I need something in collateral. And of course, it costs some fees and an annual interest. You would say, I don't care, that's fine. Because the investment I'm going to do is going to give me a better gain. Or maybe it's absolutely required. However, and you will agree with these conditions. That's usually what banks did over decades. I would say even about centuries. That's their main core when it comes to income. Options, for example, derivatives, it's not new. In history, we will find even the word options, not derivatives, but options related to farmers, even 500, 600, 700 years ago. So that was also part what banks managed, You can sell, for example, your farmer's outcome just 1 year in advance to a bank for less money, because you are expecting that, the season is not going to be that well. In case that the season, because it's pure speculation, was better than expected, the bank was the winner, the farmer, in that case, the loser. So, just to make clear, options were also part of the banking system, like credit. The problem happens when central banks started to reduce the interest rates, because they just wanted to flow the whole economy with cheap money that let gamblers just be absolutely high like after drugs. It was so easy to make money. I know, not so many, but some people who just recognized that at the right time, and they started to take loans, to invest in risky assets, but they didn't care, and they had a good hand. And so today, they are on the winner side. Many banks didn't. I remember I was once, and that's one of my best customers, to be honest. I was talking with the director of the bank, and I remember he told me, listen, it was so easy for us. It was just, that was just a never-ending cash cow. We received so much money making credits because it was so easy to receive the money by the central bank and to receive, just to generate the money with the fees, with the interests. It was so easy to make money. But for banks, the big challenge started when the central bank started to reduce the interest rates. And that was the big pain. And you can imagine when you are a person that you are making loans and you see that you can't sell your money, you can't loan your money for the conditions you need to, because you have fixed costs that you have to cover and so on and so forth. You can do two things. You can find an alternative way to get for your liquidity a certain interest rate, so that you can receive some rent, some yield for your money, high enough to cover your fixed costs. But that's going to be a zero-sum game, so you are not going to generate a lot of income because of that. It depends, of course. If the counterpart is not a serious one, the interest will go higher and higher, like the yields. That's like DeFi. If you have a huge high yield, you should be alarmed. So it's the same. So and banks don't like, usually, to make risky business because they feel much more comfortable, and they are very familiar doing that, to make a lot of money without any kind of risk. That's the optimum. It was in the past even business as usual. So the problem started when central banks just initiated the cheap money area, and many banks started to look around and to say, okay, we need alternatives. We need to rethink our business and to go other ways maybe. One way was to look for assets where you can lock, or you have to lock, your liquidity for a longer period of time, but you are getting a higher yield. Many banks did that. My client, for example, as well. So they lock their liquidity in higher yields to cover their fixed cost and maybe even to have a little bit more of plus to invest, because regulation costs and so on. If you are running and operating a bank, it's not just you have a desk, two persons, and they are making loans. Regulation is really a pain in the ass, costs a lot of money. You need to use systems that cost millions and millions and millions, not only to initiate them, to migrate them, but also because of maintenance. You have, credit rating systems, you have compliance, you have so many processes that are so costly. So my customer, a very conservative bank, decided we prefer to create a new business, a parallel new business to the banking one, and to generate income also with that in that way, while we are receiving some yields, locking our liquidity in different long-term assets. But lock means it's not available for you at any time. Okay? Maybe you can cancel the contract, but you have to pay some penalty or you need to put money in your hands just to get your liquidity back. So it's not that easy. And that's worst case. So when the central bankers then, because of the inflation and because partly because of the Ukraine conflict, but it just came up before the Ukraine conflict, that just put much more pressure because of the oil price, gas prices, and so on and so forth. It was a huge challenge for banks to rethink again their business. Because I know that my bank client is very conservative, but I know from other banks who are not that conservative, like the Deutsche Bank, they just said, we are going to focus more on trading. Even a little bit more riskier, because the money is cheap. Like hedge funds did, like private equities did, like so the shadow banks, and many others as well. But so we can split to different banks, from those who are conservative and they still have in mind their old business model, and those who adapted very well and who are now in the winner side and are buying those who are in trouble now. We know, at the moment at least, we have one bank in mind. That's JP Morgan, for example. But the thing is that when the central banks started to tightening their monetary policy, that was something that many didn't expect. It is. I mean, I was expecting that, because you can't just pump and pump and pump money to a market, because everything has a limitation. So usually you need to make what Bitcoin is doing at the moment, up a little bit down, up a little bit down. The trend could be up, but sometimes you just need to give a breath to the market. And that's something that the central bankers didn't. They didn't. They just pumped money and money and money and money. They printed so much money to the markets. Of course, they used every single crisis as an argument to say, oh, we need to pump more money. But what happens when the whole economy starts to stabilize? Usually inflation comes up. And that's what happened. The Ukraine conflict was another factor that, of course, brought some pressure to it. But the thing wasn't really the Ukraine conflict. The problem wasn't 2008, for example. The problem was that central bankers, sometimes, in my opinion, also driven, and much more of the pressure came from the governments and politicians and lobbyists, who just said, okay, we are going to pump money to the markets. But what happens when the problem is stabilizing, when the problem is cooling down? You have a lot of money there. You have to react on a very sensitive way, but quick, when the situation is stabilized. And they didn't. They just, everything is fine. Interest rates are still at zero, and that's fine. Maybe even negative. And that had a consequence. Because many banks, for example, those who lock their liquidity to assets, mid and long-term assets, of course they were in trouble. Holy shit. Now we can make money with credits again. But, where's our liquidity? It's locked. The problem, their interest now, their yield, maintains a level, while the interest rates is pushing up more and more and more. So, of course, what to do? To get more liquidity? Why the interest rates is, to be the loaner, why the interest rates now are increasing, it doesn't make sense. You're paying for that. It's not part of your business model. You should be the guy that has the liquidity, the money available to make loans, not the opposite. But that's the fact. And that's why many banks are now in trouble. And why some banks, for example, like Goldman, JP Morgan, we know JP Morgan. How many times we talked about market manipulation by JP Morgan? Gold, for example, on the court, it was confirmed. They did that over decades. The gold market, for example. Okay, they did a lot of market. That was part of their business model. Loans, yeah, that's fine, but that's too conservative. Let us gamble. Let us manipulate. Let us use the volume and liquidity we have to drive a market in our favor, of course. And that's what they know. They are experts doing that. And that's the big problem we have right now. That those banks, in my opinion, the healthy ones, those who are part of our system, who are providing and offering credits, good credits, cheap credits even, who are just bringing some competitions to the credit interest and yields, for example. Those are extremely in trouble right now. But the others, the gamblers, those who did where the business model wasn't necessarily the credit or the credit business, but much more the trading one, like also, for example, the Deutsche Bank, those are doing good money. Goldman, JP Morgan, Deutsche Bank, all those are still making a good income. And that's a huge problem that will have a big impact to the economy. Now we can talk about if it would make sense if the Fed stops to raise the interest rates. And I have talked about that a little bit yesterday as well, because if they do that, if they stop, they could give some banks a little bit the breath and a little bit of space just to manage the situation better. So it wouldn't be a bad thing. They would, but at the same time, in my opinion, delay something. Because some people say, inflation is dropping so hard. That's not true. That's absolutely not true. The only thing that it is declining, that's true, but it's not dropping hard. Because after the interest rates pushed up that hard, many central bankers were expecting a different progress in inflation, and they are noticing it's not happening. So to say, how inflation is dropping that hard, the Fed is killing the economy, it's not true. They killed the economy just years ago, and nobody yelled it. Nobody was crying because many people were doing a lot of money, even in crypto, making it. Because it was in their favor. Now it's not. And that's what I said yesterday. The problem is we are the problem. Greed is the problem. You know, if we would be people who are neutral and taking the problem as it is and analyze the problem without any kind of bias, then we would notice that the problem, yes, of course, the initiator of the problem was the central bankers and the governments. Of course, and partly we, because we elected those people. Maybe not you, not me, but the masses did. And if they manipulated the elections, nobody went to the streets, or at least not the masses went to the streets to kick off those governments from parliaments and from their chairs. So However, the problem right now is that we have two different groups of banks. And I would love to see that the banks are getting back to their old business model, because I think that's a business model that helps the citizens as well. I don't think that those banks who are mainly manipulating markets, using their power in the markets to drive the markets in their favor, are making a good support or helping the citizens. Absolutely not. We have seen the consequences of 2008 because of that. To hide toxic assets, declaring it as something that's cool and good, selling to everyone. I mean, isn't that crime? It should be a crime. What happened? Nothing. Government said, well, we need more regulation. What happened? Nothing. They spent, I guess, billions. And people like me sending them to banks and, getting just some contracts to advise them how to make it better. But do you think that companies like PricewaterhouseCoopers, Ernst & Young, and many others elite consultancies went there just to fix that? Of course not. And you know why? Because the CEOs of the bank said, it's fine. I mean, it's part of our business model. We need to hide toxic. If we are noticing that part of our portfolios are in risk, should we be honest and say, oh, we have a problem? What do you think will the shareholders do with our stocks? It will have a sell-off. So of course they try to hide. And those guys are those who are spending billions every year in consultants. So obviously you have a dependency between both. That's not going to fix the problem. The only level that could fix that problem would be on government level. I remember when the US in 2008 started to say, okay, you need support? Well, then we will send some government officials to there and they will take the lead of the bank. I said, wow, that sounds a little bit like socialism or communism. But on the other side, I thought, well, I mean, taxpayers' money is taxpayers' money. These guys, the masses, has to go to work every single day to make an income, and they have to pay taxes. And it is not fair that a bank could collapse because they are making, operation that looks very like crime, and governments will take the taxpayers' money to save them and save their assets. So I was struggling if I liked what the US did in 2008, but I came to the conclusion, yes, it was a good thing. The only problem was it was just for a period of time. And in my opinion, I would say I'm really a capitalist. I love capitalism. I grew up with capitalism. I don't know anything else. I mean, yeah, I grew up in Germany, in Berlin, a splitted city in communism or socialism and democracy. And I know what socialism and communism is, but I didn't live there. So I don't have, I even can't identify with communism or socialism. I'm a capitalist. But to be a capitalist and at the same time a Democrat, it's not easy at all. Because sometimes both are in confrontation. Means if you are failing with your business. And your business is important for the whole economy of a country, means also for all their citizens, and you need my support as a government, then I should take you over and kick your fucking ass out of the chairs of the management. And this company will maintain part of the government, of the estate, all over the time. That's another thing, another problem that I see, for example. In Germany, we had a huge phase of privatization. Yeah. In the healthcare. The only hospital that's still part of the public, so of the state, is the army. It's the military hospital, Bundeswehrkrankenhaus. Almost everything else is in private hands. Maybe Red Cross, or some church, but almost everything is part of a company, a church, a foundation, but nothing else is part of the government. But it's not also why we are paying taxes? I mean, I would like to have under control some hospitals as a citizen. For example, schools, almost the same thing. I mean, the only thing that governments are doing is saying, yeah, well, we spend tax money in museums, we are spending tax money in, to rebuild the streets, maybe to make, and sometimes you say, well, okay, where's my tax money here? Then you go to a hospital and you think you are, third class passenger in a sinking ship. Like in the Titanic, where you are in the bottom. That's Germany today. It wasn't the same just 30, 40 years before. Things change, and that's absolutely okay. But things have to change in a way that makes sense and that is in favor of the citizens who are paying for it or who need them. I mean, every single taxpayer is paying for it. That's another initial comment that it's trying to give you a little bit the core of the problem. It's not just bank. It's not just the governments. It's everything related to it. It's a system we created that it was developed by lobbyism, by wealthy people, we had a counterpart that was the syndicates, but what happened to the syndicates? At least in Germany, syndicates doesn't have any vote, anything, and not even a voice. And today, for example, if they go out and say, hey, we need a higher real salary, for example. Do you know what the companies say? Well, if you want a higher real salary, so we need to pay more salary to the staff, it's okay, but then we need to cut more staff. And that's at every crisis that happens. Every time when we had a crisis, they used that to reduce the real salary. At least in Europe, in Germany, for example. I think in the US it's a little bit different, but however, that's a trend. That's a trend. And governments are closing their eyes, their ears, their mouth, and that's it. Everything what is happening right now, it's not new. It started just 1-2 decades before. We are now just receiving the results of it. Unfortunately. We will see. That's a process, and I really hope they can delay it as much as they can. I really hope. But in my opinion, because that's the hope inspo, but the realistic inspo says, They delay it since years. And now they know we don't have any options more on the table. So now let us go and talk a little bit about the markets. So as mentioned yesterday, the weights ratio 30 days moving average is lifting up a little bit more. So, but you know, not that much. I mean, we are still maintaining a level of 51. The weights ratio 1 day time frame declined to 49. So I guess we will go down a little bit more. And then we need to see what's going to happen next. At the moment, it seems they sent enough Bitcoins to centralized exchanges and they are distributing. I mean, as mentioned so many times, the best thing you can do is on TradingLight, to check the order books and to see the market operations. And you will see, for example, right now Coinbase price pushing up. They are selling 30, 40 Bitcoins at once, and so on and so forth. So they are just using the opportunity to sell on upper price, but it's distributing. The question is, why to distribute here if you can distribute at 60K or 70 or 80? I mean, to be honest, if we take a look to the market, they could even push up the price to $300,000. The question is, if someone is going to buy all these Bitcoins at that price, of course, and the way up. I have my doubt, because people have less money in their pockets. So, in my opinion, as long that Bitcoin could maintain a lower level, that could attract people. But if it's going to go more up, I think some people will, of course, trigger more FOMO and start to buy even then less Bitcoins. But in my opinion, that's not going to attract and to bring more volume to the markets. Absolutely not. We are unfortunately still far away from mass adoption when it comes to crypto. Absolutely. So let us go forward. But however, I always need to add this sentence. Mass adoption will happen because crypto is the future. But for that, we need a regulation, and not a national-wide regulation, a global regulation. And that will happen. The question is when. Until then, Tether will still pump liquidity to the markets, it seems. And that's what, at the moment, is just pushing the price. It's almost only Tether. That's it. So let us go forward. Well, forward, I was too quick this time. If we take a look here, for example, that's the 1 hour time frame. Once again, we can see they are doing it over and over again. It's not the same here, for example, but you see that, 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 even here, for example, and the price push more up, push more up, push more up, because it's, as mentioned so many times, it's the market, it's in the hands of few at the moment, of few big entities, or entities who have enough volume to drive the market. We can see here, for example, that we reached a level in stablecoin reserves on centralized exchanges from, for example, beginning of April. Then it went up and it declined a lot. Now a little bit is coming in, it pushed up, now it's declining. If we take a look, for example, we had bigger outflows today in Bitcoin, so why they pushed up the price. And yeah, we will see if that's the local top. Let us go forward now to the next chapter. So also here, as just mentioned, if we take a look here, we can see they sent, for example, today in the morning, that was the biggest here, almost 1,000 Bitcoins. But the outflow, for example, we can see they used to buy here relatively big, it seems. We had an outflow here of 2,095 Bitcoins, and right now also pushing up to 800 Bitcoins. If we take a look, that's net flow for stablecoins, we can see it's a zero-sum game today, so nothing big. They are still using those stablecoins who are still in the market and centralized exchanges to push up more the price and to distribute. We can see very well what they are doing, you know. So they reversed here, they flipped to up. Once again here we started to create a trend line, and we can see that they are pushing more up. Usually I would expect the next go down once again. That's something we need to see, but it's taking a little bit longer as expected once again. So timing, it seems it's not my best skill. However, let us go and check the next chapter. So funding rate pushed up, declined, and just close, or while the price started to push up, the funding rate pushed up very hard. We need also to say that it's not a live ticker here, because the funding rate is not calculated every single minute. So I guess that's why we are receiving a delay almost every time. So front running here and afterwards here with delay here, but also indicating, and that, I mean, we know that the future volume is much higher than the spot volume on Bitcoin, also indicating that's the main asset that's driving this market at the moment. So it makes sense that the funding rate and the price correlates together. If we take a look here, we also see that, for example, the leverage ratio, while the open interest here pushing up very hard, the leverage ratio declining. So some people are, it seems, just closing their high leverage positions. If we take a look, we can see that we received here almost, what is that, 260 millions close before we went down and afterwards up. It looks like that was a little bit the preparation to push up the price afterwards. If we take a look here to the net flow related to Bitcoins and derivative exchanges, we can see they are cashing out. So it's more negative and more red. Also here, for example, 2,800 Bitcoins outflows, indicating they cashed out here. And right now, no big volume related to Bitcoins coming into derivative exchanges. Well, yesterday was a very quiet day. 350 Bitcoins liquidated from longs and 213 Bitcoins liquidated from shorts. We can see that the funding rate is pushing up once again. We can see that the open interest is recovering and leverage ratio at the same time. So it's, the market is every time pushing more and more based on futures. So if we take a look here, of course, now shorts are coming in. Wow. On Bitfinex even harder, but at the same time also longs. So we have 47 to 53 now in favor of shorts. On Ethereum it looks like 43 to 57, relatively similar, but also interesting that 1 billion in shorts on Ethereum. That's really crazy. If we take a look to Bitfinex, 36 millions. I don't remember when I have seen 36 millions in shorts on Bitfinex. 2.7 billions. I think the lowest level I have seen on Bitfinex was 2.6 billion or 2.5 billion just close before we started to nuke or something. But usually that's for me the most interesting part, because that's a lot for Bitfinex, at least. So the Kingfisher, uh, 300 million. So also here, for example, liquidation clusters reduced in volume. We have a big one, for example, here 27.7, so relatively close to our current price, but the biggest one would be in low leverage levels. Also here, for example, in shorts, we need to go up to 42 to liquidate them. It's not really realistic in short term. And also here, it seems we liquidated a lot of shorts, and now we have here, for example, the biggest long liquidation cluster in the in high leverage positions at 28.8. So we can go down, but we can go first more up, because at 29.7, for example, we have the biggest high leverage liquidation cluster, and even a little bit more at 20. So let's say 230k, and then maybe go down back to 28.8 would be possible. So let us go forward. So we see that BUSD and futures are the main driver. If we take a look, the Tether pair with Bitcoin on Binance was supporting a little bit the move, but nothing big. Even the aggregated wasn't, but BUSD was, and BUSD, and of course as well the futures. Even USD didn't support, USD pairs didn't support that move, indicating they're distributing, and only Binance at the moment just pushing up the price. That's the only thing. BUSD, aggregated, coin margin contracts, stablecoin margin contracts. On Bitfinex, it's clear like water. They are selling more than buying. It's pure distribution, and that explains maybe also why their shorts are rising up. Yeah, if we take a look, it's very, very interesting. The aggregated with Bitfinex, because Bitfinex doesn't have that huge volume, but if you take a look, that looks really interesting. Bybit also not doing anything, declining. Coinbase distributing, higher the price, more distributing. So they are selling more than buying. Bitstamp doing the opposite, pushing up. Same Kraken. And Gemini, yeah, very volatile, but 20, 40 CBDs, it doesn't make, who cares? So let us go forward here, for example. Let us start with the entities today. We can see retail buying. This year declining a little bit, this year increasing, this year declining. Market maker pushed up because these guys are declining, so those here shifting back to market maker entities. That's something. Vice versa, they are always shifting to the next entity and not. And those here received, and seems, yeah, beginning of May, more money. That's the Binance Cold wallet. Now counts of wallet per entity, those guys pushing up. I mean, solid what retailers are doing, because they are buying. Those guys here lifting up, those guys here lifting up, those guys here declining, those guys here lifted up, while these guys here decline. And these guys, nothing happened. So if we take a look now to stablecoins, we check. I need to reduce a little bit the time frame. Wow, look, that's really volatile here. But you can also see the price. You see here, for example, the red line is the supply on exchanges. Supply on exchanges rised up. Afterwards, the price pushed up. Afterwards, it declined. The price declined. Afterwards, it pushed up with the price. Then it declined. Then it's now pushing up much more. So it seems we will go a little bit more up. Yellow, blue, blue, yellow, yellow, blue. And yeah, looks like an orchestra. Very nice synchronized, it seems. And yeah, it's big. I mean, it's 1.4 billions inflows, and afterwards 1.35 billions outflows. So indicating it's just push up, decline, push up, decline. We received here, for example, with Tether, almost 166 millions. Afterwards, the price pushed up. Also, USDC a little bit more active, nothing big, and BUSD, first time since a while that some more yellows coming in, as you can see, and GUSD, well, that's nobody should care about. So market maker, the last transaction, bigger one 770 bitcoins happened this morning. That's it. It wasn't miners, as you can see here. Their reserves are still very stable. Funds are still declining more their balances, and well, spot volume versus future volume still declining means more future, less spot volume. And that's it. Let's go forward. So you can see here the CBD of Coinbase. I really can, if you want a little bit, to be honest, that's the only chart, the only app that's 24/7. Oh, well, it's not 24/7, but always, every time when I turn on my computer and until I turn it off, it's this app always operating in the background, always, because you have so many informations here. You can see, and that's TradingLight, different exchanges. You can see here well liquidity were placed. Of course, be careful with spoofing. You can see real-time market rates, and you can see real-time order books, and you can see what they are doing. You can really see what they are doing. You can see what exchange is bullish and what exchange is bearish. For example, well, not only because of the CBD, but Coinbase was distributing the whole way up, while Binance, for example, was pushing up. It's really interesting. So, and you have much more indicators here. I'm not making any kind of promotion for TradingLight. I'm using TradingLight really since a while, since it was a beta test. I really like it. What I don't like is to see what Coinbase is doing here, to be honest. That's pure, I don't know what's happening to Coinbase. I didn't see such kind of structure in the past. Someone is using Coinbase as well now with algorithm or something. To be honest, I don't like that. However, also in settings, for example, you can make aggregated trades, and you can say everything above of 0.5 bitcoins, please show me here in the chart. Absolutely useful. On Binance, you can see when they are going to sell or buy bigger amounts, and that usually indicates someone wants to push up more the price. So just to tell you. However, Coinbase prepared for 33, it seems. They are reinforcing here 32, and they are here bringing some sell orders as well in place, still protecting the area at 25k as well, and still a wall at 27.5. Now Bitstamp. On Bitstamp, we can see also here they are at 30k, waiting with the sell order at 30,500, otherwise between 25 and 26. Nothing have changed here. Now Binance with Tether. Binance with Tether reduced their volume a little bit to the downward. However, they are also protecting at the moment, at least at 30k, but they also have a lot of sell orders here until 31,300, and at the moment also protecting 28k, and everything between 27.5 and 25 is well protected. At least they are waiting there for some liquidity to buy the dip. So 28.4 on BUSD, nothing changed here since yesterday, just a little bit more liquidity at 25.3, but that's it. Now Bitfinex. And on Bitfinex, you see that it's really interesting. So they are just removing all the sell orders to the upside, and they are bringing more volume to the downside at the moment, also at 27k. OKEX spot usually nothing. Kraken usually also nothing. They are waiting here 28, and on the other side they removed some volume at 30k, for example, and now they are placing even something at 32k, so it's possible we will go much more up, it seems. I don't know. BitMEX nothing. Now derivatives, we start with Bybit and US dollar, BTC US dollar, nothing. Now with Tether, nothing. Now Binance with Tether, and you can see that they are ready to short at 30k, even a little bit more up. At the same time, everything at 28k, so it's possible we will go to 28k, then up again, but first up, then down. Oh, who cares? BTC BUSD, nothing. Now Bitfinex, that's usually the most important one, and those guys are waiting here 20. They are pushing the price up. You can see here, for example, 29, 29.1. They say we want to push up, we want the price to go much more up. You can also see that their algorithm are now using even more volume, it seems, and they are waiting here 30,500, even 31. Kraken futures, also pure algo. OKEX futures, algos were pushing up the price. Now they reduce the volume, so you can see here they use more volume just to push up more, and now from here they stop with that. That's interesting. And now Deribit, and Deribit, yeah, they removed here at 25,400. They removed here a lot of liquidity, but they removed also here the short orders at 30,800. And I'm absolutely not sure, but it seems from 29.9 they shifted down to 29. Well, 29, yeah, 29. They shifted just a few dollars down. And that's it. Maybe that's the local top before we go down, make such a correction to 28 before more up. Yeah, obviously Inspo is not in the game, so I really don't know. If I take a look here, yeah, once again, it's not attracting me to trade, so I'm just saying, okay, do whatever you want to do, but it doesn't look, it's very interesting to me. Okay, that's it from here.